Alrighty. Good afternoon, everybody. Uneducated Economist here. So in this video, we are going to be talking about the home builders and how these home builders are not sitting in a very good situation considering what is taking place within the economy right now. And that's mainly the buyer traffic is down. Without buyer traffic, the home builders are not going to be incentivized to start new projects, and that is now becoming obvious within the market. You can see from the building permit issuance that is falling and now coming out within these articles, and I left a bunch of links down in the description, that is proving this case, that the home builders are backing off. They're pulling back on a lot of these projects, and it's really because of that home buyer traffic. Like, if buyers are not there, the builder is not incentivized. Now, there is a particular niche within this market that the builders are incentivized by, and that is the rich, wealthy elite. Those people are still buying homes. In fact, there's an article down in the description talking about how the Toll Brothers are saying 70% of their market is going to wealthy individuals. Now, this is an obvious sign of the separation between the rich and the poor, between property ownership and those who can deploy their capital into an investment that is going to have a return. Basically, those who are capitalists and those who are property owners are going to separate themselves from everybody else. And you can see that now taking place within the home buyers, being mostly, or according to Toll Brothers, a good majority of their entire customer base is wealthy individuals. And this is now an obvious sign of how the Cantillon effect really plays out. If you have a separation between the rich and the poor, there is really no better sign of it than property ownership. That is, if you can get into property, that is a sign of a good, strong middle class economy. But if the middle class is struggling to make ends meet, struggling to come up with a down payment, struggling to even make the payments, even if they have a down payment because the elevated interest rates, they're not going to be able to get into a house. And now that is what is creating the inequality that we are now seeing. You can blame it on all kinds of stuff, and don't get me wrong, there's plenty of blame to go around, but to understand why it's taken place, to understand that we have this separation, this inequality that is happening due to the fact that we have ever increasing amounts of new money that pours into the system that separates the rich from the poor. And this is the sign of it. Now, when I think about what it is that I am seeing from the building supply industry, because a lot of you know that I work at a lumber yard, I do retail sales for a living, I keep a close eye on the lumber market, like lumber futures, lumber inventory, mill curtailments, all that stuff paints a really good picture of what is happening within the new construction market. And now I know a lot of people, and even in this video and probably already within the chats, you're going to find people who are going to say, oh man, you ought to come to my area. It is just smoke and booming here. There's all kinds of projects happening. It just happens to be in your area. I'm talking broadly across the entire country. What we have is a slowdown in builder activity. And that is going to be trouble coming into the future. If you have a gap in production, then think about how much overproduction that you have to do in order to make up for the fact that you have slowed down in your production. Right? See, the demand for houses hasn't gone away. People say, well, there's less demand now for houses. That's not true. There's less capable demand. See, there's plenty of demand, plenty of people out there who would love to buy a house. They can't afford it. So they're not considered part of the demand because they're not even looking. They don't have the down payment. They can't make the monthly payments. They're not even in the game. But it doesn't mean that they wouldn't want to buy a house. And that if the capability did come down, they would be in the game. Demand would increase if the capability was to come down to meet that demand. The demand hasn't gone anywhere. It's still there. Even though we don't have the buyer traffic, even though we don't have what would appear to be a healthy housing market where you have inventory turning over, where you have like lots of transactions, even though that's not happening, it doesn't mean that there's a lack of demand. Right? It's a lack of capable demand. That's the difference inside of this. And so as we see going into the future that there is going to be difficulty bringing interest rates down because of the inflationary pressures that we're experiencing. And again, like if you've been following this channel for any length of time, you never really thought that they were going to bring interest rates down. They were going to be extra high, extra long for an extended period of time to make up for the fact that they failed to achieve the 2% target over the previous 10 years, the neutral interest rate being too low. These are the major concerns coming from the Federal Reserve, and it ultimately means that they are not going to lower interest rates anytime soon. Even if they did lower interest rates, it doesn't mean that the mortgage rates are going to come down. We've already experienced that just recently as the Federal Reserve cut their Fed funds rate by 0.5 percentage point, and we watched mortgage rates go up. Quite opposite of what it is that people were thinking or anticipating by the Fed's actions. So again, I just kind of step back a ways and take a look at it for what it really is. We are now meeting a moment inside of the economy in which that the idea of transitioning back to where we were, where an average job could buy a house, is out of the game. Like, it's past the tipping point. And it's becoming obvious now with just look at some of the articles that, I leave down in the description of this. When you look out there and you see how it is that an individual would have a very difficult time to buy a piece of property, get the permitting, buy the material, construct that home. This was something that was really easy to do back in the 80s. Somebody working a regular 9-to-5 job, didn't even have to be that fancy or great, could acquire a piece of property, get the materials, construct that home themselves, even with limited carpentry skills. These days are gone. You're not going to find that situation coming back. You're going to find that the limited supply of inventory out there is only going to go to the most wealthy, capable individuals. Those of us who are struggling at the bottom end with 9-to-5 jobs have to come up with ever-increasing amounts of income, whether it's second jobs or side hustles. We have to cut back on ever-increasing amounts of our pleasurable experiences and even back on the necessities. And even when we do that, the capabilities are still barely there. I know, I'm doing it myself. I bought a house in one of the most expensive areas in the entire country, with cities ranging from 10 to 50,000 people. Astoria ranks number 10 as the most expensive. Right? Here I have a regular average job. I don't have a degree or some kind of professional business or anything like that going on. I have my regular job, I have my YouTube channel, my wife's job, my side hustles. It takes all that stuff, all of it, in order to make it here. And even now, I still can't afford to go out and buy a new car. I mean, I probably could, but that would be it. I would be at the end of my rope. Right? Every month it would be a miserable existence trying to figure out how it is that I'm going to be able to enjoy myself and still be able to make the payments. I mean, I recognize it here in my hometown. I recognize how we were a very, how do I put it, working class county here. I mean, it was loggers and fishermen, and the homeowners and the property owners were of those people. Their wants, their desires were reflective within the town itself. It was a place that you could exist. I mean, I graduated high school in 1995. My wife and I graduated high school together, and we were, with our part-time jobs, able to take those part-time jobs to full-time jobs, rent an apartment, and move out on our own the day we graduated. She was actually already living in that apartment before she graduated. Right? This is something that I cannot imagine anybody doing nowadays. Those days are gone. So it's better to understand what is happening here than to try and figure out a way to solve it, or thinking that there's somebody who's going to come in with some magical idea that can fix the whole situation. It doesn't go down like that. And it's not going to go down like that. What we are going to find is that the ever-increasing amounts of inequality and driving of that wedge between the rich and the poor will continue. So long as that new money is pouring into the system, this is what we can expect. You know, I would love to come out and say, hey man, I got these great ideas on how it is that we're going to provide housing for all the people out there, and everybody's going to be singing Kumbaya, and we're all going to be like super happy about the situation. It doesn't, no, not like that. It's best to understand the situation so that you can position yourself in accordance to it. See, this is what I find truly amazing, is that a lot of people say, well, we need to figure out a situation in which that we can do it like the old way, where I can go and get that job, be disciplined, save up enough money, put that money down, and then my monthly income would be enough to make that house payment. That's not going to happen. So it's better to recognize that that's not going to be the case for most people, and that they're going to have to figure out another way. They're going to have to team up with people. They're going to have to do house hacking. They're going to have to figure out a way that they can do this without the traditional means. Because if you don't do it, you're going to get left behind. Like, if you are not moving into property ownership with like almost a desperation to it, like if you do not do this, you will fail and die kind of feeling, or at least capital, is like deploy your capital into something, in stocks, bonds, investments, of some sort of business activity, like, starting a business. This type of mindset, if you're not doing that, then you're going to be left behind. That's all there is to it. If you think that a 9-to-5 job should be enough to have a living wage that will then give you the ability to progress through life in a way that, your grandfather did or something like that, it's very delusional thinking. It's not going to work. Right? I mean, it might work. You might be able to do that. Like, I shouldn't say you can't do that. What I'm going to say is that it's going to be so difficult to do something of that nature, to follow along that line, that most likely you are going to be very frustrated and upset by at the end of the road, knowing that you should have probably made other decisions that would have separated you from the poor. And mainly that would have been getting into property ownership or stocks, bonds, investments of some sort of business activity. Right? All right, how far are we into this? 11 minutes. When we got up in here, all right, let me cruise it back here a little bit. All-nighter. I don't have the choice, Neil. I'm broke at the moment. I don't have the choice, right? What's the bullseye icon upper left of my screen? Couldn't tell you. If inflation kicks off, will interest rates eventually go up or down? It's a weird time right now with tariffs. Okay, so first of all, the tariffs haven't really kicked in yet. So it's all credible threats to believe, to think about the tariff idea of it, which is legitimate. Don't get me wrong. I mean, the tariffs are a real possibility, and most likely will be kicking in some sort of fashion. But to think about it, like right now, we have no impact on the economy due to a tariff. I mean, there's some, right? But not like the major ones that everybody's talking about yet. That hasn't occurred. And so everything that's leading up to this tariff and the actions that people are taking are all based on credible threat. Right? So it's important to understand that is what drives inflation, is the inflation expectation. So as we anticipate the tariffs and what that's going to do, we start behaving and acting in ways that starts driving the inflation up, even if the tariffs haven't even been kicked in yet. And so by those inflationary pressures pushing into the economy, pushing those interest rates up higher, what we are really going to find is that neutral interest rate is going to begin to rise, or it's going to continue to rise. I shouldn't begin. Is going to continue to rise. That is what the Federal Reserve is looking to do. All right. Like, people say, have all these ideas of what it is that the Federal Reserve is trying to do, and get 2% inflation target and all this other stuff. No, that's very inaccurate. Nothing could be further from the truth. I've done so many videos. I just did a presentation down at Zuber's conference. There's nothing that could be further from the truth. The Federal Reserve is not attempting to get to a 2% target on inflation. That is so bogus. It's a 2% average inflation rate over time, meaning the long run 2% inflation expectations. Currently, they are going for moderately above 2% for some time. And this isn't me saying this. This is the Federal Reserve's report to Congress that came out on the 7th of February. Or even, I think it was even later than that. Anyway, the economic report to Congress said those words exactly in it, that the Federal Reserve is seeking to achieve inflation that is moderately above 2% for some time. Right? So this 2% target, completely delusional thinking. I mean, completely. All the articles, 99% of the articles that are out there within the economic sphere, 99% of them are claiming strategy on a 2% target. They are wrong. Period. End of story. They do not get it right. The Federal Reserve wants an elevated inflation expectation so that they can get the neutral interest rate to rise. If the neutral interest rate can rise, it will make it less restrictive on the economy. This is all them saying this, not me, right? I'm just restating it. These are all things that they have said within their own speeches and statements to each other. That neutral interest rate rise will then make it less restrictive on the economy if the Federal Reserve stands still. That's what the Fed is looking for. They want an elevated inflation expectation. It will raise the neutral interest rate. They can stand still, do nothing at all, like literally nothing except for flap their gums, and then have that neutral interest rate get ever closer to them, which is their intended goal, is to be at neutral. Interest rates aren't coming down. I don't know why they would. I mean, the Federal Reserve lowering interest rates is giving up their ammunition. That is what they use in order to stimulate the economy, is that monetary policy. However, it's failed if the neutral interest rate is low. It doesn't work. So they have to use their words, convince the people that there's going to be inflationary pressures coming, tariffs, warning of tariffs, actual tariffs, whatever it is that's going on out there within the economy. This pushes the elevated inflation expectation, raises the neutral interest rate, and that is a win for the Fed. Like, they have no intentions on lowering interest rates. That's giving up the ammunition. The only time they would do that is if there's problems with the labor market, or if they actually see a true weakening within the economy that would then force them to try and stimulate the action so that the labor market would stay strong. Like, that's it. Outside of that, there's no reason whatsoever. There's no reason to lower interest rates at all at this point. If labor market is strong and inflation is still elevated above their 2% goal, whatever the hell that's supposed to mean, but if they still have an elevated inflation expectation moderately above 2%, they're winning. This is what they want. I don't know why they would change. Like, people are like, what are they going to do next? And I was like, nothing. They are succeeding at what they wanted to do. Why would they change that? That doesn't make any sense. It's like, if they change it, then they wouldn't have what it is that they got. All right, 328 people watching. This is great. What time is it? 11:26. Cool. I still got a few more minutes out here. Love you all. Well, thank you, P. Love you too. All right. There is always a chance for another housing crash. It will suck for homeowners, but great for buyers. It won't. See, here's the problem that is going to end up existing, is that most people are not in a position in which that there would be a housing market crash, right? I mean, you think about it, even me right now, if I take in my own consideration of the house that I purchased at an elevated price 3 years ago, people told me that I was going to be totally underwater right now. That's wrong, right? I am actually very much above the purchase price that I had paid on this house, and it had gone up stupid amounts of money. But it also had a significant amount come out of it. Like, at one point, the ZELLE estimate on my house had gone up over $100,000 from my purchasing price of it. It didn't make any sense to me. So when $80,000 of that came out, not even 80, it was more like $70,000 of that came out of that ZELLE estimate, and the price came down dramatically, was that a crash? Just curious. Like, it was at $600,000 and now it's like at $525,000. Was that a crash? Because it's still $50,000 more than what I had paid for it, which is still stupid ridiculous, but that's what it is. So I don't see where that crash had occurred. I mean, somebody could say, oh, 600, now it's 525. That's a total crash. Yeah, no, it's not even close. And since most people are sitting in a position like I am, where they made a purchase within the last 3 years and the house price is now far more than what they had paid for it, why would that go into foreclosure? That doesn't make any sense. Even if they stop making the payment, just sell it. All right? Or rent it out. See, a lot of times people take into consideration what had happened back in the great financial crisis. There was so many people there who were going to be like not making their payment. Like, they got the loan and never had the capability of paying that thing. That doesn't occur now. So all those loans that created the financial crisis, the great financial crisis, that doesn't occur like now. Like, that's not occurring today. Most people are sitting on mortgages that have an incredibly low interest rate to them. That's why they're not selling. That's why they sit right where they're at. Better than what is it, 50% of homes are outright owned? Like, there's no room for a housing market crash when you have demand that is as dramatic as we have right now. People don't see it because the demand is not capable. The moment that house comes down, the interest rate comes down, that moment that it starts moving into what would look or appear to be a crash, you know how many buyers are going to come out of the market to support that thing? Hell, I'm one of them. I'm prepared, ready. I have the money to put down on a house right now. You think that if there wasn't an incredibly good deal that popped up in my area, that I wouldn't jump on that? You know how many other people are sitting in the same position that I am? Waiting for that kind of opportunity? We don't even care about buying into houses right now. Like, I would love to be the property owner, landlord and stuff, but in my area, it is so difficult. The cheapest house that I can find right now, and it is a busted ass down house that needs a lot of work, is $275,000. Right? Like, I remember when $275,000 would have got you a beautiful home here in Astoria. Now it gets you a crap hole. Right? The ugliest thing you could ever possibly imagine, as ugly, like broken windows, old siding, single panes, just everything about it wrong, right? $275,000 in our area. How are you going to buy that, fix it all up, and then rent it out without charging $1,000 a room, right? $3,000 a month or something. Even then, you probably would barely be breaking even. Right? This is the area that I live in. You are the man, Simon. Well, thank you. I appreciate it. If house traditionally go up 3 to 5% a year and they went up 40% in 3 years, we have a flat market for years and a necessary crash for a reset. I would agree with that, Tom, except that we don't live in the same conditions in which that you are trying to compare that to. Houses go up 3 to 5% a year if you build them regularly, right? If you build them regularly, if you have people out there who can construct their own homes, who are out there taking out permits and starting those homes out there, if you had that situation going, then I would agree with you. But we don't. We have a huge gap in production taking place. And the house prices keep going up because there's ever increasing amounts of demand coming to the market. Every single day, there is more people who are showing up saying, hey, I want to buy a house. Now, whether or not they have the capabilities of doing it, that's a whole other story. But in their head, in their minds, they would love to buy a house, and I don't care who says that they wouldn't offer one up to them for free and tell me they would turn it down. No way, they would take it. Every single person would. I know they would. Right? And so even though we had these ideas of having a 3 or 4% rise, and then all of a sudden you have this huge one, well, yeah, it's because we all of a sudden had a very dramatic change in the way that property ownership has taken place. There was a time that an average dude with an average job, an average discipline, and an average down payment, and an average monthly payment could buy an average house. That doesn't exist today. Gone. Right? You got to be exceptional. You got to have far more income than everybody else around you if you're going to be able to get into a house, because you're going to have to be better than everybody out there who is also wanting to get a house. There's just simply not enough of them. And all these people out there say, oh, there's plenty of homes. There's all kinds of empty homes and stuff out there. Are you not seeing it? Property ownership is the sign of wealth. If somebody owns 16 houses and only lives in one of them, and that means 15 houses are empty, that's the separation between the rich and the poor. That's the property ownership. That is the sign of inequality. It is happening. And when people say, well, they shouldn't have empty houses like that, well, maybe they should, shouldn't, whatever. It's not fair. This isn't a fair game. It ain't a fair, situation. Life isn't fair, right? It's the signs of the times. Rich, wealthy people own homes. And if they have vacation homes that sit empty, again, it's the sign of the times. It's the sign of the inequality. The fact that it could even happen. I wonder what Melody Wright thinks about the lumber and building supply situation. Couldn't tell you. Housing markets vary by location. By fall, you will eat all these words, Simon. You know how many times I've heard that, Steve? You know how many times? My channel, you could go through the comment section of my channel and pull that exact statement out probably 10,000 times. All right. Do you think that I am concerned about anything that has come up in a random comment on here? You know how many people told me that I knew nothing, that I was going to be a failure, that I was going to be completely underwater on my house? Do you realize right now that I am sitting more in assets over the last 5 years than I have accumulated in my entire life? Like 40 years of effort didn't do what I could do in the last 5 years. I had property ownership with mass equity in it. I got stocks, I got bonds, I got crypto, I got gold, I got all kinds of stuff that I have accumulated over the last few years because I recognize how it is that inequality takes place. I understand that I want to be on that other side of the wedge, and I ain't sitting around waiting for times to change. Eat my word. Yeah, okay. You know how many times people have told me that on this channel? Like literally, like 10,000 times I've heard that. You know? All right. Okay, let's see here. I feel locations where there are more older homes than newer ones being built are going to suffer with price reductions. I mean, I'm from an area that's 200 years old. Like, there's no room for new construction here. All these homes are old homes. Right? And we live in the most expensive area there is. So if you're talking price fluctuations, yeah, it happens here. Right? Going from stupid expensive to absolutely ridiculous expensive back down to stupid expensive again. That's what's happening here. All right. UE's economy is at an all-time high. Mine is, yeah, my personal one, because I live my own economy. Right? I don't live the economy that everybody else is out there. People, say, oh man, it's a bad economy. And I'm like, well, it's a bad economy depending on how you positioned yourself. I mean, there's plenty of people out there who position themselves to have ever increasing amounts of debt issuance at low interest rates. And the moment that flipped, they were done. I didn't do that. Right? I didn't leverage out in the future by buying fancy cars and doing all that kind of thing. Like, I kept myself very low on my expenses and tried to increase my income as much as possible so that I could put myself in a position to get myself on the other side of the wedge. I don't know how many people are in a desperate mindset to do that. Like, literally, I don't have that much time to screw up. I can screw up a little bit, but I did all my screwing up before I was 40. I can't screw up anymore. I have to do the right thing right now every single time. Right? And that means staying very disciplined, staying very active and very conscious about what it is that I am doing and paying attention to out there. Right? I don't have any expectations of anybody out there doing anything that's going to benefit me. None. Not a president, not a boss, not any friends, nobody. Nobody out there is going to do anything that's going to benefit me. The only thing I can do is try to position myself the best that I can see it for it. That's it. All right, it's beautiful outside to be stuck indoors with the flu. Yeah, I know. I'm kind of feeling sick myself. Fish are friends, not food. I don't like libertarians. Sorry. Well, that's too bad. I mean, that's too bad. This country was founded on libertarians, so, I mean, it's basically saying you hate the forefathers. You hit the like. It's free. Jesus paid it all on the cross. All right. Nobody coming to save you. That's right. Nobody's coming. And that's where I find, like, a lot of times people are like, oh, he's going to make it so much better. And I'm like, what? Like, he? Who? Like, I mean, there's, like, I can understand that if you're spiritual, there's probably one he who could come. But for the most part, if there's any living actual being on the planet, there ain't nobody coming. There ain't nobody. Right? Okay, I was in Portland. How is the housing market out there? I really didn't get to check. It sucks, man. It's expensive as hell, and it's very few properties. Right? That's what it is. It's really expensive, and it's very few. And like working class individuals, it sucks for them because now it's like, I even think about it. It's like, okay, so here, I want to be able to be a property owner landlord, and I'm just thinking about it. Okay, how do I do that for the people? Right? How is it that I go and get a piece of property and then rent that out to people so they would have a place to live? And so I look at that cheap little house, that, well, not even cheap, that expensive rundown house, and I'm thinking, okay, it's close to the hospital district, right? Maybe, nurses or somebody would want to have this place and walk to work, like be able to walk to their office or whatever. If you take that house and then you go and you incorporate all the cost of upgrading this thing up to what would be a decent house to live in so that you could get a decent rent out of it, I don't think it would pencil out. Like I literally do not think that you could buy a rundown house here in Astoria, fix it up, and rent it out for a reasonable price. You would have to rent it out for so much more than what people would ever possibly be willing to pay. And this is like, how are you going to do that on a fancy house or a nice house or a new one? Like, it's just, it doesn't make any sense anymore. It just can't happen. So being in this area, and as popular as it is, and as popular as it's getting too, having purchased that house that I did was probably one of the smartest moves I could ever have done here in this area. The retirement, community is growing dramatically. The hospital district is exploding, right? Remote workers are pouring in from Portland because they hate the area. It was just like, it's one of those particular housing markets that is not going to see a whole lot of new inventory coming to it, and the available inventory is going to be super expensive. Typical case of the empire has no clothes, Fort Knox. I lucked out and closed on my fixer-upper in 2021, bought for $40K, put $40K into it, appraised at $170 with the cash out refi. See that's the way to do it. Like a $40,000 house, like that's something that, like, I would be interested in doing. You can't find a piece of property, like a buildable lot, for $40,000. That doesn't exist here. All right. What did P have to say? P had a question. Let's go see if I can find it. See Benny up in the house. What's happening, bro? All right. I don't see where P's question is. All right. 433 people watching with 98 likes. Thank you so much for hitting that like button. Excuse me. I knew you would like that, Andrea. Okay. Just be glad you're not in New York or San Francisco. Yeah. Location. Yeah. Buildable lots where I live are $250,000 minimum. See, that's kind of like what we're experiencing. It's not quite that expensive, but I see buildable lots at 125, 150. People hold the house as long as the math works out. Yeah. What's the food scene like in Astoria? We have great food here, P. We have some of the best restaurants that you could ever imagine when it comes to seafood, and it's just like regular places here. So like if there was like any place in particular that is really unique, like I like South Bay restaurant, the South Bay, I think it's South Bay Wild Seafood, something like that. They have really good food down there. I like going to Fort George. It's a little trendy, but they got some pretty decent food up there as well. There's so many like just little places like the food carts that are just exceptional. There's one called Surf to Soul. If you can find that one, it's kind of in the middle of town. But if you go to Surf to Soul, that guy makes this cheesy shrimp grits that are just amazing, just so good. And I just like, even the thought of it right now makes me want to go get some. So there's a few places in town that are really exceptional for their food. All right, thank you so much for the super chat. Really appreciate that. If you remember, how long did it take to get used to talking to the camera? Was it velocity or time? If you remember, how long did it take to get used to talking to the camera? So like doing these live streams and stuff like that, I found that live streams are actually easier than trying to do doing a pre-recorded video. If I screw up or I say something in a recorded video that I don't like, I will stop the video and start it over again. I can't do that when I'm live streaming. And so everything that I'm doing with live stream, it comes out to like, this is how I feel. This is like, me in a flow state, essentially, not thinking about it, just like going for it. And it's easy. Like doing a live stream is probably the easiest thing in the world for me to do when it comes to YouTube. Doing a pre-recorded video is more difficult, even though that's what I had originally started off doing, was just these pre-recorded videos. But live streams are by far the best. And now that I feel very comfortable doing it, it's kind of weird that I am now feeling very comfortable on stage. Like when I went down to Zuber's conference, the One Rental at a Time conference, I kept telling everybody, I have no idea what I'm going to say. Like I didn't know. Like I knew I was going to talk credible threat theory, but I didn't have any plans or ideas or rehearsed it or anything like that as far as what I was going to do once I grabbed that mic and I was up on stage. And it was funny because Dion said, you don't need any time to prepare for an hour-long speak. You need 10 minutes to think about it, right? And get up there on stage and do an hour. If you want to do 10 minutes, you need to prepare for a week. And that's really true to think about, because in a 10-minute conversation or statement, you got to get a lot of information out there and be very accurate and make sure you get all the points out there. But when you're just up there just going for it and just talking, you're just letting it flow, and it's easy. There's nothing to it. And I felt very comfortable being on stage now. Of course, I was spending a lot of time on stage between doing live streams, doing bingo, doing the play, going to Zuber's. There was a lot of stage time that I had. And so it feels more natural to do something live or be on stage than it is to even not be doing it. When I'm not doing anything like that, it's like, man, when is the next time I'm going to do the live stream? When's the next stage presence? When is that going to happen? So for me, it was a very easy transition to just stop doing the pre-recorded videos and just start moving into live streams. At first, I would have a lot of anxiety before I would actually go live, but then once I was live and started doing the video, it was nothing to it. It was just very easy. So practice, just doing it, repetition, right? The more you do it, the more comfortable you get at it, and the more familiar you are with it, and then the more natural it is, and then it feels normal, All right, does your company have a retirement plan? Yes, they do, Brad. In fact, I have just beefed up my contributions to the 401k and the Roth 401k or 401 plan or whatever, which is matched by the company. So this is one of the best things about having a W-2, is having a employer match contribution to a retirement, because it's like an instant doubling of your money, right? I can't think of anything out there as far as an investment goes that can match instantaneous 100% return, right? Of course it's going to take me until I'm 65 before I can get it, but that doesn't matter, right? It's the point of it is people out there are looking for some place to put their money for a return. They're looking 10% here, 15% there, and I'm thinking all I had to do was just take a W-2 and just have my employer match my contributions, and boom, 100% return. Perfect. So yeah, I do that. I do everything. There's nothing that I don't move into. I even consider the house that I'm buying as far as a real estate plan. I only need the house for another 10 years to raise my family. After that, I don't need that big old house. I can rent it out, I can sell it, I can do whatever I want with it. And, so ultimately, I've already started down that path of property ownership and becoming a property landlord. It's just going to be time before I get there if I plan on doing with the house that I've already purchased. Okay, what time is it? Alrighty, guys. It was fun hanging out. $50 a week in Bitcoin. Absolutely. Dollar cost averaging into Bitcoin has done so well for me, guys. It's probably the best position that I have taken in anything. I didn't expect it. Wasn't even necessarily wanting it. Obviously I want, for the Bitcoin to go up, but I wasn't really had much expectations of it. I really bought into Bitcoin on a regular $50 a week or every other week or once a month if I couldn't afford every other week. I did that because of Lynn Alden suggesting that to me when I asked her, how do I time the Bitcoin market? How do I know when to get in? And she says, don't even bother. Dollar cost average for 4 years. There is no time in their economic models and history of studying, even if you had started at the top of the market, that you would be under. For 4 years, dollar cost average into Bitcoin totally worked for me. So worked for me. And I wish I had put more in it, but you always wish you could. All right, I've been DCA unto silver since 2024, $40, $50 a week, and I just completed a monster box. Good for you. Smart lady, Lynn. Yeah, absolutely. Super cool, too. Chill person, in person is just, very, very mellow, very calm, and cool and collected, and yeah, very much like on the videos. Okay, you guys are awesome. Thank you so much for being here. 394 people watching with 126 likes. Thank you so much for hitting that like button. Thank you very much for the super chats. I always appreciate them super chats and the support you guys for the channel. I can never thank you guys enough for that. I did have an inquiry about sponsoring the trip down to the Rebel Capitalist live event. So there is an individual who says, hey, how much do you want to wear a t-shirt down there or something? And I'm thinking, I don't know. I was hoping to have the whole trip paid for, so, you know, finding a sponsor in that fashion. But if we need to break it up and say, hey, I'll wear a t-shirt for 4 hours or something for a certain price, we might be able to do something like that. But anyway, for those of you who are, you know, looking to maybe sponsor the channel in some way, that's going to be a good way of doing it, to get me down to the Rebel Capitalist, get all-nighter down to the Rebel Capitalist, and, you know, help pay for flights and hotel and food and all that other stuff going on. That would be awesome. So anyway, Uneducated Economist, you guys let me know. Is that your 10 super chat goal? No, the 10 super chat goal, I actually have a bit of insider information when it comes to the lumber industry and the timber industry, kind of combining them two together. And I don't really have, like, it's good information, but I don't really have permission to share it. So if I am going to share it, I want it to be to a bunch of people who really, really want that information. And I figured if they really want it, they would throw a $10 super chat, you know, cumulatively get 10 people to do that, and I'll share that information with you. Again, it doesn't cost you that much. $10 super chat's pretty simple. As far as the information that you would get could be very valuable that comes from that. But again, we don't have to do it. I can keep that to myself for now. Uneducated Economist, you guys let me know.